Good morning, traders, and welcome back to the Trader Bacon Show. I am your host, Gates Adams, and I have an awesome show set up for you guys today. I am looking forward to this. The last few weeks, we've had an opportunity to revisit some previous guests and kind of get an update and see where things have gone since the last time we've seen them. And I have been having such a great time sharing this and experiencing this with you guys. I decided to do it again. Our guest today is Jesse he's on YouTube at Trading with Jesse W. You're going to have to check him out. When we first connected, there was an obvious connection in terms of being able to just share ideas and just enjoy each other's company. So I'm looking forward to bringing that in today. But before we do that, got a little bit of business to take care of. First and foremost, last week's winners from the Trader Bacon Show of the evaluations. We have I'm sorry if I butcher these, as I say every day. Aspiris, Jimmy with 2 Y's, and Taylor Alexander. So congratulations to you guys. You should have all the information that you need to get those set up and moving. If you have not done so already, check your email. Also, want to congratulate Apex Trader Funding. I mean, just milestone after milestone going down, over $269 million paid out to traders. And as it stands right now, we've got about a day and a half left of 80% off any size of valuation using promo code Benzinga. And it's also $40 resets on any size of valuation. So make sure you take full advantage of that. Great opportunity to just scale up and build up the arsenal of your evaluations and PA accounts. Also, if you have not done so, be sure to check out the Forge Trader podcast. I've been having such a great time with this, but not only has it been fun and it's been very insightful for me, and it has had such a positive impact on my trading overall. And my hope for myself and for you guys is that if you have an opportunity to listen to it, give me some feedback. Let me know if it's helping you out in any way or if you gain any sort of insight on your trading from that as well. So all of that said, I am so excited to bring back my man Jesse on today's episode of the Trader Bacon Show. Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now. Jesse.
Yo, what's going on, man? How's it going?
Dude, it's going fantastic, man. How are you?
I'm living life, man. Having a great time. We're down here now in the Florida Keys. Those of you who watch my channel see that the background is different. I'm down here at my other house in the Florida Keys on the water, just enjoying it, man. Trading in the morning, doing a little bit of busy work in the midday, and then in the afternoon, jumping on the boat and heading out.
Beautiful, man. Well, I love it. That's one of the things that I love talking to traders who actually live the desired trader lifestyle. You see so many people who will get in and they'll start to be successful, and then they will create this sort of momentum and obsession, and they'll spend 10, 12, 14 hours in the charts, either doing research, watching other videos, or in some cases trading that long. And while there's obviously some value in that, I think it's important to remember why we started doing this in the first place. We want that time, we want that freedom, and we want that lifestyle. So, dude, thank you for sharing that with us, man.
No, man, for sure. It's one of those things where people, like when I started trading, and I think when you're new, it's important to put in those hours, not trading, but watching the charts. Mm-hmm. And then once you're in there and you're making money, you just trade. You're, and we'll go over that in the stats. Trade where your stats say that you're good in those hours, and the rest of the day, take it off.
There you go. I love it. And again, I don't want to take away from the importance of doing the work on the front end. That's the point where I am right now. My hours are crazy in the charts and videos, but there is that end game. And if we don't really enjoy and appreciate that, I think we lose something. So let's just do a little quick recap on kind of your trading background. Now, how long have you been trading now?
Dude, what is it? About 8, 9 years, something like that. Mm-hmm. Something like that, more or less. Started off with small caps, the pennies, chasing those short squeezes and the low floats, and gradually worked my way into futures. And I traded futures during COVID and did really well. Then I went back to trading stocks and the equities themselves and the options. And probably over the last year went right back to futures again. Not because I couldn't do well with stocks and options, it's just because I like futures way more. It's one of those things where you just wake up in the morning, you got 1 or 2 vehicles you trade, and you just have to worry about macro news, and that's it.
That's awesome, man. And not to do a full-blown shameless plug, but futures does give you the opportunity to not have to put up your own capital with Apex Trader Funding. By the way, forgot to mention it right in the intro, but be sure to fill out that form that is in the chat right now for your chance to win one of those 3 evaluations we're giving away during the show. Enough of that. So, okay, so at this point, strategically speaking, you've traded equities, you've traded the options, and futures. Strategically speaking, how much of a difference is there for you from one instrument to another?
I love that question because there is no difference. A lot of times people will be like, oh, do you change the strategy? Is it a different strategy? No, I trade, and I've traded this year. I've traded crypto. I've traded some options, equities, and I trade them all the same, meaning I trade the same type of setups. If it's a bull flag on Bitcoin or Ethereum, and it's a bull flag on Google, and it's a bull flag on NQ, they all get traded the same. There's no difference.
And I love that. And I ask that question pretty frequently because that's, I think, a point that needs to be hammered home. And one that I kind of learned as I was going through the process, because a lot of the training that I was looking at was all FX based. And I kept second guessing myself because I thought, well, maybe it works here and not here. And over time, I've come to realize that realistically speaking, if you're charting, if you're price action trading, it's pretty much the same thing. There's really not a lot of variance. Now, you might be at an all-time high in NQ, which may change the dynamics versus trading crude oil or whatever the case may be. But at the end of the day, what you see is what you see. And it's the psychological response to what other traders are doing.
That's it. That's all it is. I don't know. I remember as a new trader thinking, oh, it's got to be different, but it's not. And I understand there are strategies out there that people trade that will make it so that it's different, or they might not even know how to touch a futures chart. And that's why it's great to trade with, somebody like Apex, where you can get in an evaluation and kind of test out the waters and see what it's like to trade futures where you're not risking, $5,000 of your own money.
Right.
But once you patterns,
go ahead.
No. Once you trade, the same thing.
Yeah, it's the same thing. Sorry, we got a little bit of lag, so I'm seeing your mouth still moving as we're
it's like one of those old martial art movies, huh?
It almost is. I'm about ready for you to attack the dragon. So, so at this point now, is trading just your sole source of your primary source, I should say, of income? I mean, is this what you do for a living?
So trading started out being like just something that I was trying to figure out, right? In the sense of, is this business going to make me side income? Because that's what I was looking for. I was looking for some extra side income. And it got to the point where it got there. Now it's actually starting to fast approach being on par with my regular income, and over the next few months I could see where it might overtake my regular income. And the reason why I say that in that sense is because I don't have a job. I've been self-employed for almost 20 years or just around 20 years now. So for trading to overtake that, it's going to take a while. But it's fast approaching to the point where I think it's already on par, basically. Some months I'll make a little bit less. Some months I'll make a little bit more, stuff like that, trading, than my regular income. But at this point, over the next few months to a year, if things consistently stay the same, I can see where trading is going to surpass my self-employment income.
Right. And I know as a small business owner myself, for most of my adult life, there's a difference between the time commitment to trading and the time commitment to operating a business. At least once you get past that point, as we talked about before, where that consistency is in play. So let's talk a little bit about how you trade, because of course there's a million different ways to trade. And as I mention all the time, we're not trying to teach anybody how to trade on the show, just show the fact that there's a million different ways to trade successfully. And to me, what I've seen, the one key component really is that discipline and consistency. If you take the same trade, you can get your stats and you can evaluate them and see if it works for you or not. which is I think where a lot of traders falter. It's hard to get statistics when you're breaking your rules, when you don't have a set structure of how you trade. So let's take a look at your charts and see what it is that Jesse's looking for when he's when he's trading.
Yeah, absolutely. So I have a couple of chart setups here. It's just basically chart patterns, right?
Mm-hmm.
You've all heard it said bear flag, bull flags, cup and handles, ascending wedges, descending wedges, all of that. It's all patterns.
Mm-hmm.
So I like to sit and watch and wait for patterns, as well as chart setups where there might not be a pattern, but there will be a level of support or a level of resistance on the chart on a larger time frame, and I'll trade that. I would say that most of the time I'm trading support resistance zones, but when I get a nice sweet pattern, I'll attack it. So here you'll have this is an NQ chart right here,
Right.
and these are some trades I took. I'm pretty sure it was in a $250,000 PA account. And as a matter of fact, this morning I passed a 250K PA account, taking advantage of that $85 lifetime fee. So
Okay,
right
congrats
here
on that. Yeah.
Thank you. Right here, when this trade started off for me, it started off as just resistance. I was looking for, see how we dropped and then we bounced? I was looking for a resistance zone. And I didn't realize that we were doing a bear flag. I didn't realize it. So right here we have the bear flag formation, plus we have that resistance zone. So I started to scale into this trade. I got stopped out a few times because I had not taken a step back and seen that we had, oh, my light running out of battery. I had not seen that we had multiple setups going on here at once. And whenever you have a pattern plus some sort of larger time frame zone, like a daily or a weekly zone, whether it's support or resistance, it's irrelevant. Just make sure that it's coupled with the pattern you're trading. In this case, we had this. Yeah, in this case, we had this 5980 zone that was acting as resistance on a larger time frame. Plus, we had the bear flag. When I entered the trade initially, I didn't notice that we had two things converging. That gives it strength. So I got stopped out a few times here and there. Once I realized that we had both things together, I was already out of the trade. Oh, that's a fire alarm. Once I was sitting back and I realized that we had both things combined, I attacked the crap out of it. I jumped in here short. I added in here short. And then remember, this is your flag. We break down and I start taking profits. I like to scale out of my trades. A lot of people will say, oh no, hold on to your whole trade until your target. I like to have multiple targets.
Sure.
So my stop here would have been basically over this 85 zone, would have been over that zone. And my first target was 60. My next target was right down here in front of this low. All right. It was the US sessions low. And I'll always take a piece of profit off in there. Why? Because what if you're holding onto your whole position? We get down here and you're thinking, oh, we're going to crack that low and we're going to flush. I'm going to make bank. Well, what if you just stop short right in front of that low by a point or two, and then it rips face off. And before you know it, you're up here at 160.40.
Come on, Jesse, you know that never happens. It always hits that target, right?
You know what I mean? So as soon as we get down in front of that potential support zone, I'm short. I'll take a piece of profit off to protect myself. And then I'll hold on to a run or see if we can get deeper into this. And I mean, look, we're short from what, 79, 77. And my final take was under 5,940. I think that's a banger.
Yeah.
I think that's a banger. Now, a lot of times, and I'm going to give a little golden nugget here, a lot of times you'll hear somebody explain what I just did, and you'll go out and you'll trade it for yourself and you'll get ran over. There's a key thing that almost no one ever talks about on YouTube because they put it behind paywalls. And look, I have courses, but I'm going to give you this information. Right here, when you get this bounce, if the volume on the bounce is big, don't get short, in my opinion anyways. I won't get short. Why? Because it's showing you strength. It's showing you that buyers are coming in there and they're buying up on that bounce, meaning either you got net buyers, whether it's shorts that are covering or buyers that are getting long. But here you're getting that bounce into the zone and it's small volume. Look at the volume on the drop, how big. Look at the volume on the bounce, how small, showing you weakness. It's a weak volume bounce. Now, can that still push? Of course it can. But it's a numbers game. You got a higher likelihood, in my opinion, that a weak volume bounce is going to end and dump versus it ripping your face off.
Right. Well, and this brings up a really, I think, important point because, look, any new trader that starts going down this road, they're going to see a PDF sheet that's going to show the bearish and bullish flags, pennants, et cetera, and so on. Every chart symbol and structure that you can potentially see and trade. And then they'll go in and they'll just look for it and then they'll just trade it. There's the missing piece of the puzzle because you have no confluence, right? So what are the different pieces of the puzzle that you look for when you're looking to see if, say, for example, you see that this is the bearish flag there? What else do you want to see before you're like, I'm all in?
So everything that I explained there, plus you always, if you like to use technical indicators, you can use technical indicators with it, right? Let's say you have yourself something like VWAP in this zone. Well, now you have yourself the bear flag. You have yourself that daily level that's showing you resistance or possible resistance in that 80 zone.
Sure.
If you got VWAP there at that 80 right to 90 zone, so it's hovering. Well, now you have even more. You have that. Or if you like to use your fib levels and you got something like the 23.6 Fibonacci level there in that same zone, well, now you have that. So you have multiple different things that are showing you possible resistance there. Right. The more the merrier.
And I think that's a beautiful point. And I think one that again, a lot of new traders tend to forget is that one piece of information is not necessarily enough. But you have to be able to read these different levels, whether it's, having an EMA on the chart, whether it's, or a fib level or the VWAP or whatever the case may be, whatever, or just knowing where that support resistance is or where that supply and demand is. I shared with you this morning, I'm not trying to toot my own horn, but I took a trade this morning and I set a deep target for a runner at a demand level. And it banged my take profit and then bounced right back up. Now it came back down and went right through it. I mean, it was, but when you see that reaction, it starts to build confidence in the understanding that all of these pieces of information are meaningful in some way, which gives you the confidence to put them together. But you got to be able to get them on the quick.
Exactly. Think about it this way. Look at this. This is an example of a bull flag. Right now, if you don't look at the volume, you just say, okay, it's a bull flag, and you trade it, and it fails. You're like, oh, damn, why did it fail? It's a bull flag. And that used to happen to me as a brand new trader all the time. I would trade bull flags endlessly, and I would get fail after fail after fail, and I didn't understand why. It's in the volume, right? It's in the volume. So here you have your flag pull. You have big volume. You have your flag consolidation. You have small volume, decreasing volume, showing you there's just some passive profit taking going on. There's no panic selling. There's no insanity. It's just profit taking on that big push, right? And then you break out of the flag. You start increasing volume again, showing you what net buyers stepping back in, buying this move. Shorts covering. So, when a short covers, it becomes a net buyer. You're getting that push higher. The higher the volume on the breakout, the more likely it is to extend. But not only that, look at what you have. You don't have only just the bull flag. You have the VWAP here, that purple line here. This is my TC 2000 chart. This is actually Alphabet's chart right there. You have support, 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 all at the bottom end of the bull flag, which also happens to be your VWAP. Now you got VWAP support, you got bull flag. Now what happens here? It goes to what you were just saying. When all this couples together, why does it make it stronger? Is it just because it's VWAP? No, it's because you have a bunch of players on the field. If this was just VWAP and there was no bull flag, you would probably just have VWAP traders, because there's literally people out there who will just trade VWAP. That's it, nothing else. Right. Now you have here VWAP traders, right? There's people out there who just trade bull flags. They don't care about VWAP. It's not even on their chart. Those guys are in here trading that bull flag. And then you have people who trade it all together. Now you have those guys on here. The more players on the field, the more likelihood that that VWAP bull flag zone is going to hold, and you'll get that push higher.
Right. So let's talk about results, because again, we always bring on the successful traders onto the show, and some traders are real comfortable talking about this and some are not, but you have some stats that, you keep your stats on your trades, how you're doing. And so what does that look like for you? What is it that you're looking for? And how is that playing out for you?
So stats are very important to me. Not because it strokes your ego, but because when you go through a drought, when you go through a period of time where you're not doing too well, you can fall back to your stats and be like, hey, I'm still that trader that does this, this, and that.
Right.
You can also go look and see and pinpoint where you're good at, where you're not. I have two $250,000 accounts right here. One I've taken payouts out of with Apex, and one I have not been able to take a payout out of. I have struggled insane with this account, okay? Not because I'm trading it different from this one. It's just simply I'm trading it individually, and I'm not doing well with it. I'm struggling in that account. In this account here, you'll see that I have 65% accuracy on it. On the one I'm struggling, I have 47% accuracy. You would think, damn, how are you even alive? Well, because even though they're really close together, my winners are still bigger than my losers. Average winner here is $260. My average loser is 228. To me, that's garbage. I don't like that. Even if I had a 60% accuracy here, I'd be making money on this account. I still wouldn't be too happy because they're too close together. I like to have that be much more separated. Largest winning trade has been 1,000. Largest losing 800. My longest winning trade has been 9 minutes, where my longest losing trade has been 10 minutes. I don't like that. Now hop on over here to the account where I've actually gotten payouts out of, right? You have 65% accuracy, $231 average winner, 163 average loser, 620 largest winning, 470 average loser. Now, longest winning trade time, 17 minutes. Longest losing, 6 minutes. I'm trading, for whatever reason, I'm trading this account much more disciplined than I'm trading the other one. And I'll get to it. I'll get to the bottom of it and I'll figure it out. Another key thing that I like to pay attention to, and we're going to go discover it on the other account because I haven't looked at it yet, is what time of day I'm most profitable and what time of day I am a sloppy trader or I'm a losing trader. Here in this account, you can see clear as day. My best time frame is right around that 10 a.m. Look at that 10 a.m. green bar. That thing looks insane. It looks like Jerome Powell just stepped on stage and said something dovish, and the market just bang. That's what it looks like. And then that 9:45 to 10 a.m. is where I need to be living. Typically, 11 a.m. is where I cut it. It has to be the market's doing insane things for me to stay trading. Typically, 11 a.m. is where I cut it on the day. Look at the 11 a.m. Look at the afternoon. Very small green, very small. When I do trade it, I decrease size. We hop on over here where I'm struggling and check it out. During my prime time trading, I'm actually doing horrible. Why? I don't know. This is the type of thing that I like stats for, because I can dive in here and I can look and see what's going on. I have not dove into the stats on this account very deeply yet, but I am going to, because I want to figure out what's going on. I suspect that I'm oversizing in this account. That's what I suspect, just based off of my largest winning trade and largest losing trade. That's what I suspect. But I'll figure that out. But going in here and seeing other accounts where I'm doing well and I'm getting payouts, it helps bring that conviction in that you have the skill and the tool sets to continue succeeding. And you don't let just one account bring your drive, bring your confidence down. Right.
Well, and I think that's so important because, I talk about the confidence of having it hit your target and spike up. That's temporary confidence. It feels really good, but I think where true, meaningful confidence that allows you to stay disciplined when you don't want to comes from stats.
Absolutely. I'm a stats nerd for this. and it's basically only for this. I don't really care for stats anywhere else. Analytics, I freaking hate analytics. But when it comes down to the trading, I like to sit here and I like to look at this stuff and figure out what's what, because it's important. You know,
Right.
that's the key to success. Once you know how to trade, the key to success is always going to be in those stats. You're going to want to look in there and see what's going on. Where are you the most profitable? What type of setups work the best for you? What time of day? What size? Even what instrument? You know, I can trade NQ very well. You might go stick me in oil or gold, and I'll just make a mess.
Well, and you know what? That consistency, I'll tell you how important I've realized this is. In all of my studying, I ran across a video that had these massive promises. Anyway, it was a very arbitrary setup. It was an arbitrary 2-to-1 risk-reward ratio. There was no market read. There was no real design to it, but it was super easy to execute consistently over and over. So I did some back testing on 6 different instruments for like 30 trading days each, and 5 out of the 6 were marginally profitable. It was like about I averaged in like the high 30s to low 40s win rate, but it was a 2-to-1 arbitrary target, and it was marginally profitable. And I thought, I have better market read than that. What I don't have is that level of consistency and discipline.
Yeah. You know, at the end of the day, it all comes down to our emotions. I've blown up evaluations left and right, and I've blown up funded accounts as well.
Yeah.
And I would say most of the blowups in the funded accounts have been going on tilt. You get mad because, you know, you've been green, and one day you have a nasty red trade, and maybe you gave back 1, maybe 2 days of profit.
Right.
But you get mad, and then boom. That's what happens.
Well,
that's it.
Yeah, when you start looking at things like the stats, and you can see that your average winning day is, call it $500 a day, and then you have a losing day of $6,000. Well, that's not discipline. And I think we all face this. I think we all share in this struggle, whether we're new or old. But again, that experience, knowing knowing those statistics and knowing the things that are continuing to work for you and the things that are not, help really mitigate some of that challenge along the way.
Absolutely. Trading is the only business where you're your own boss and you have no one to tell you what to do, when to stop, when to go home.
Right.
If you remember one of the shows that we did, I think it was last year, I was trading Tesla options. This was years ago. And I found myself down, I think it was $4,000 on the day. And I took a step back. I said, Jesse, do you make $4,000 in one day trading? And the answer to that was no. And I was like, okay, so what are you doing allowing yourself to lose $4,000 in your E-Trade account while you're trading? That's insanity. You got to pick a dollar amount. In my opinion, one of the best ways to manage risk, guys, is you pick a dollar amount that you're comfortable risking per single trade, and then a max loss on the entire day. That max loss would be roughly what's your best day ever. So if your best day ever is $1,000, you should never lose more than $1,000 in a single day trading.
Right.
Simple.
I love it. I love it, man. So you, I want to go ahead and promote this just because you're such a great guest and I love having you on here. Of course, people can find you on YouTube at Trading with Jesse W. Also, I didn't even know this. I see founder of the daytraderchatroom.com. Tell us a little bit about that real quick because we only got a couple minutes.
Sure. So years ago, maybe like 3, it was probably during COVID time, a buddy of mine said, hey, Jesse, why don't you start your own chat room with courses and stuff like that? So we did. The chat room is on Discord. It's completely free. And then I have all my courses on everything I trade, from options to futures, on the website there. And the reason I did it was because he brought that to me and told me, why don't you do this? And I said, the only way we do this is if it's the price points where it makes sense, because it's insane to me to see new traders paying $5,000, $6,000, $8,000 for a course.
Sure.
That teaches them how to trade a bull flag, and doesn't even talk about volume. Insanity.
Well, not to mention that, anybody who's been trading for a minute knows that they're not going to recoup that, at least for probably a couple of years, because it's not just that course; it's implementing and developing and building that discipline and all of that goes along with it as well. So thank you for that, because I know that there's so many of us out there that are, that are still finding our sea legs, so to speak. I'm going to use since you're going to be on the boat later, go ahead and use a little bit of nautical term there. And then DD929 asks, which funded accounts do you like and why? They didn't like the one-day drawdown. I'm 100% with you on that. One-day drawdown is definitely rough, which you don't have with Apex. So make sure you use promo code Benzinga and make sure you filled out that form for a shot at that. But what do you like best, Jesse?
So I like the $50,000 account and the $250,000 accounts. I feel like those two, when you look at the trail and your target, right, or your max loss and your target, I feel like those are the most easily accessible ones, especially when you have the deep discounts that Apex has been giving out lately. With the $85 lifetime fee, hopefully they extend those. That's a no-brainer for those two accounts, in my opinion. And that's what I have. I have right now probably like 12 or 13 accounts. 5 of them are $250,000 account, and the rest are 50K accounts.
I love it. I'm a 50K guy myself. I tried to scale up, and the numbers just don't work in my head for me. Well, we are about ready to wrap this up, so I don't want to run too far along here. I appreciate you guys' patience and hanging out with us a little longer today. I just want to let you guys know there will not be a show next week. It's Labor Day, and markets will be closed, and hopefully I'll be barbecuing. So other than that, Jesse, man, what an amazing show. I appreciate you stepping in and hanging out with us today and sharing some continued wisdom. We will be back in 2 weeks with another amazing show for you guys. So please don't miss that. If you haven't done so, fill out that form for those free evaluations. Get yourself started or continue to build that arsenal. I'm Gates Adams, and thanks for hanging out with us on today's Trader Bacon Show. Thanks for joining the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Make sure to